Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Amazon, a cautious buy with two major caveats. Rating upgrade.
This article was written by Vladimir Dimitrov, CFA.
Summary. Pause. Amazon.com Inc.'s underwhelming stock performance in recent years could change course in 2026. Question regarding long-term AMZN profitability and return on capital of AI investments remain, but this is less likely to be the main topic in 2026. There are two main caveats when it comes to AMZN being a buy, and investors should plan their purchases of the stock accordingly. Amazon.com Inc., AMZN, had a very rough 2025, with the stock barely up by less than 2% over the past 12 months. In the meantime, the broader equity market had a very strong year, with the Nasdaq Composite Index (IND) up by nearly 17%, which is well above the historical average. This performance has been roughly in line with my expectations from a year ago, when showed why lofty market expectations were a problem for shareholders. On a longer time frame, I have been skeptical of Amazon's stock ability to deliver above-market returns since early 2022, and have kept this view over the years even as AWS kept delivering results above expectations, something that I did not anticipate. Nonetheless, even though Amazon as a company kept delivering better than expected results, the macroeconomic environment remained supportive for risk assets, and demand for cloud services experienced an unprecedented jump. Amazon's stock is still below the S&P 500, SP 500, in that time frame. When it comes to Amazon's main peers in the cloud infrastructure segment, things look even worse. For the past year, AMZN is the worst performer among the largest IaaS players. Although I have been warning about this potential outcome for years, last September I wrote specifically why AMZN is a poor AI play. Throughout this period, most analysts and market commentators have been extremely bullish on the stock, with bears almost being non-existent. Unfortunately, this optimism was not enough to propel the stock above the market indices, and even a slight shift in sentiment could put future returns at risk. Moreover, in 2026, market participants will face a number of risks that, in my view, foreshadow a negative scenario for equities. In spite of all that, I have made the decision to upgrade AMZN to a buy, with one major caveat that investors would need to be fully aware of. But before we go into the main risk for AMZN, I will explain why I am not cautiously optimistic on the stock. A cautious buy. Over the past few years, Amazon's price-to-cash flow multiple has settled to around 20, and although it occasionally falls below that threshold, it has remained relatively stable. In comparison to other large IaaS players, AMZN also trades at the lowest forward price-to-cash flow ratio. This is mostly due to the Amazon's larger idiosyncratic risks related to its highly cyclical e-commerce operations and large workforce. That is why investors should not assume that AMZN is being undervalued at the moment, or that the multiples between these four companies should converge. Nevertheless, Amazon experienced significant profitability improvement in recent years, and that clearly illustrated on the graph below, where profitability for the first 9 months of each year is broken down by segment. The e-commerce operations will likely continue to be a drag on profitability, but there are signs that tailwinds for AWS will likely persist for now. In spite of all the risks related to the large circular deals in the AI space, the base case scenario for 2026 is that demand for cloud infrastructure and related services will remain robust for the time being. It is why the profitability drop of AWS that we saw in Q2 of 2025 might be short-lived. Coupled with continuation of the strong sales growth that we saw in Q3, this could mean yet another very strong year for AWS, both on the top and bottom line figures. In my view, this now creates the conditions for AMZN to perform well in 2026 and to outperform the market, at least in the short term. Long-term investors would need to be very careful when evaluating the sustainability of return on capital in the AI space. This is due to the recent surge in Amazon's investments, which will take many years to pay back. The big unknown for AMZN's share price in 2026 now remains the state of the economy and the equity market overall. The main reason why this is a much bigger problem for Amazon than it is for the other AI players is, of course, the company's e-commerce operations. While demand for cloud services might remain robust in 2026, the state of the U.S. consumer is far less optimistic. Consumer confidence levels continued falling throughout 2025, and the last report has once again reminded us that most market participants might be failing to properly account for that risk. So far, the red flags are all in terms of consumers' perceptions about the current and future environment. But these are often precursor to future trends in consumer spending, which is vital for Amazon's e-commerce business. On net, consumers' views of their family's current financial situation collapsed into negative territory for the first time in nearly 4 years. Source: Additionally, AMZN share price could face significant pressure in 2026 simply due to changes in sentiment towards risk assets. At present, there is significant risk for equities as an asset class, and the record-high cyclically adjusted price-to-earnings ratio, CAPE, is just the tip of the iceberg. A potential sell-off could hit AMZN much harder in comparison to most other equities due to its beta coefficient that now approaches 2. Having said that, a potential scenario where the economy contracts in 2026 and equities sell off all the while demand for cloud services remains robust could make AMZN a solid buy by the end of the year. In this case, AMZN's share price could experience an outsized selling pressure in the near term, while AWS would continue to solidify its sector positioning. Conclusion: after a very poor year for AMZN shareholders, the stars might be aligning for the stock to perform in 2026. Valuation multiples are no longer elevated to the extent they were a couple of years ago, and tailwinds for AWS are here to stay. This could temporarily make the topic of the company's long-term profitability trends less relevant, thus creating the conditions for AMZN to outperform the S&P 500. There is, however, one big if in that equation, and it is linked to the health of the U.S. consumer and a potential bear market in equities in 2026. Either of these scenarios would most likely mean yet another year of underperformance for Amazon. This article was written by Vladimir Dimitrov, CFA.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis, wild and insightful, just like me.